What if I told you that one of the most financially destroyed countries on the planet, a nation that literally ran out of money, watched its currency become worthless paper, and saw its people standing in lines just to withdraw their own savings, is now, in 2026, sitting at the top of its entire region as an economic powerhouse? Sounds impossible, right? I mean, we're talking about a country that defaulted on its debt, a country where hyperinflation hit so hard that people were literally burning cash because it was cheaper than firewood, a country that the global financial elite wrote off, buried, and called a cautionary tale. But here's what shocked me. That same country didn't just survive, it rewired its entire financial operating system. And the tool it used to do it? Bitcoin. Stay with me, because what I'm about to reveal is going to completely shatter everything you thought you knew about money, national wealth, and why your government's financial advice might actually be designed to keep you broke. This is not hype. This is not to-the-moon fantasy talk. This is documented, verifiable 2026 economic data, and it is wild. We're going deep today. Let's go. Let's set the scene, because context is everything here. El Salvador, a small Central American nation, population of about 6.5 million people. For decades, this country was defined by poverty, gang violence, economic instability, and complete dependence on the US dollar, a currency it adopted in 2001 because its own currency, the colón, was essentially dying. Now, here's the brutal truth that most financial commentators won't tell you. Adopting the US dollar sounds like a safe move, right? Stability, trust, global credibility. But what it actually meant was that El Salvador surrendered all monetary sovereignty. They couldn't print money in a crisis. They couldn't adjust interest rates. They couldn't control inflation locally. They were essentially a financial passenger in someone else's vehicle, with no steering wheel and no brakes. And the results? Over 70% of the population was unbanked as recently as 2020. That means no savings account, no credit, no mortgage, no ability to build generational wealth through the traditional system, the very system that your bank keeps telling you is the only legitimate path forward. Think about that for a second. Empowering and uplifting with a steady, reassuring voice. Think about that for a second. In a country where most people don't even have a bank account, how do you rebuild a national economy? How do you get money flowing to people who the formal financial system has completely ignored? This is where the story gets dangerous for the establishment, because El Salvador's answer turned out to be the one answer that banks, the IMF, and legacy financial institutions were absolutely terrified of. But wait, there's something even more surprising about how this decision was actually made, and who fought against it hardest. Section 2. The Bitcoin bet that changed everything. In September 2021, El Salvador made global headlines when President Nayib Bukele signed the Bitcoin law, making Bitcoin legal tender, the first country in history to do so. The immediate reaction? Chaos. The IMF issued formal warnings. Credit rating agencies downgraded the country. International economists lined up to predict catastrophic failure. The World Bank refused to help implement it. Mainstream media ran headlines like El Salvador's reckless Bitcoin gamble and why this will destroy the Salvadoran economy. And for a while, they had ammunition. Bitcoin's price dropped significantly in 2022 during the broader crypto winter. El Salvador's Bitcoin holdings were temporarily in the red. Critics were sharpening their "I told you so" speeches and getting ready for their victory lap. But here's what those critics completely missed, and this is the core lesson that every single person watching this video needs to lock into their brain permanently. They were measuring a long-term strategic move with a short-term ruler. Let me say that again because it's one of the most important financial principles in the Wise Money 360 framework. They were measuring a long-term strategic move with a short-term ruler. Sound familiar? This is exactly what happens when you try to build wealth and everyone around you, your family, your coworkers, your financially average friends, judges your 10-year strategy by what happened last Tuesday. Now fast forward to 2026. Bitcoin has crossed and consolidated above the $95,000 to $100,000 range through most of Q1 2026, with institutional accumulation accelerating following the post-halving supply squeeze from the April 2024 halving cycle. El Salvador, which began accumulating Bitcoin systematically through its National Bitcoin Office, adding 1 Bitcoin per day as official policy, is sitting on national reserves that have fundamentally altered its balance sheet. But the financial gains are almost the secondary story. The primary story is what happened to the people. El Salvador launched the Chivo wallet, a government-backed Bitcoin wallet, which gave millions of unbanked Salvadorans their first ever access to a digital financial system. Remittances, which represent nearly 24% of El Salvador's GDP according to World Bank 2025 data, suddenly became dramatically cheaper. Before Bitcoin, Salvadorans working in the US were losing 10% to 15% of their hard-earned money to Western Union and MoneyGram fees every single time they sent money home to their families. Think about the cruelty of that system. You're a migrant worker. You're sacrificing everything, time with your kids, your health, your comfort, to send money back to your parents, your children, your community. And a financial middleman is quietly taxing you 15 cents on every dollar you earn. That's not a transaction fee, that's a poverty tax. And Bitcoin began dismantling it. Now here's where it gets really interesting, because El Salvador's transformation didn't just happen because of Bitcoin's price appreciation. Here's where I need you to put on your Wise Money 360 glasses, because this is where the real financial education lives. El Salvador's rise didn't happen by luck. It happened because of 3 deliberate, systematic pivots that every individual investor and financially awakening person can model in their own life. Pivot 1. They chose an asset with a hard cap. Bitcoin's supply is mathematically capped at 21 million coins, forever. No government, no central bank, no emergency committee can vote to print more. When El Salvador was operating on US dollars, the Federal Reserve's monetary policy decisions made thousands of miles away in Washington, D.C., directly impacted El Salvador's purchasing power. Every time the Fed printed trillions during COVID stimulus, Salvadoran savings got diluted. They were victims of monetary decisions they had zero input on. By holding Bitcoin as a reserve asset, El Salvador effectively acquired a position in an asset that becomes more scarce over time as demand grows. Now, I'm not telling you to bet your entire financial life on Bitcoin. That's not wise money thinking. But here's the actionable lesson for you. Tip number 1. Audit your savings for inflation vulnerability. Right now, in 2026, the US inflation rate is running approximately 3.4% annually, according to Bureau of Labor Statistics Q1 2026 data. If your savings account is earning less than that, and most traditional savings accounts are, you are losing wealth in real terms every single day you don't act. The question isn't whether to hold some Bitcoin or hard assets. The question is how much of your financial exposure you can afford to leave in depreciating cash. Pivot 2. El Salvador embraced financial infrastructure over financial dependency. They didn't just accept Bitcoin as payment, they built volcanic geothermal Bitcoin mining infrastructure. They created Bitcoin bond proposals, called volcano bonds, to fund national development. They positioned their unique geographical resources as energy assets that could power sovereign wealth creation. What does that mean for you personally? Stop thinking about money as something that happens to you. Start building financial infrastructure in your own life. Tip number 2. Start stacking income layers, not just cutting expenses. Cutting your morning coffee will save you maybe $1,500 a year. Building a second income stream, digital products, rental income, dividend investments, a small Bitcoin position held in cold storage can generate 10 times that. El Salvador didn't get rich by spending less. They got richer by creating a new productive infrastructure. Mirror that principle in your personal finance strategy. Pivot 3. They changed the national psychology about money. This is the one most people completely ignore, and it might be the most powerful of all three. When a government tells its citizens, you can use Bitcoin, it's legitimate, it's legal, it's yours, it does something profound to the collective financial mindset. It says you don't need a bank's permission to participate in the economy. Tip number 3. Challenge the inherited poverty scripts in your mind. You were probably taught that real investing is for rich people, that Bitcoin is for tech bros and criminals, that you should just save what you can and hope it works out. Those are not financial strategies. Those are resignation statements dressed up as advice. In 2026, the top 10% of Bitcoin holders include school teachers, nurses, bus drivers, and blue-collar workers who simply decided to educate themselves and take strategic action 5 years ago. The wealth gap between those who understood this early and those who listened to fear is now measurable in the hundreds of thousands of dollars. But that's not the craziest part of El Salvador's story, and honestly, this next section is the part that should make every viewer genuinely angry. Section 4. Fraud Alert. The institutions that wanted El Salvador to stay poor. Let me drop something important here, because this is the Wise Money 360 Fraud Alert section, and today it's particularly sharp. When El Salvador moved toward Bitcoin, the International Monetary Fund, the IMF, applied significant pressure to abandon the Bitcoin law as a precondition for securing a $1.4 billion loan deal. Let that sink in. An international financial institution was essentially saying, we will only help you if you give up financial sovereignty and stay within our system. Now, in early 2025, El Salvador reached a modified agreement with the IMF, one that involved making Bitcoin acceptance voluntary for businesses rather than mandatory. Some Bitcoin advocates called this a retreat, but here's the nuanced Wise Money view. El Salvador kept its Bitcoin reserves, it kept its Bitcoin accumulation strategy, it kept the Chivo infrastructure. It simply adjusted the mandatory acceptance requirement, a political compromise, not a strategic surrender. But this episode should set off massive alarm bells for you as an individual investor. Here's your fraud alert. Be deeply suspicious of any financial authority, institution, influencer, advisor that benefits financially from you not diversifying into alternative assets. Traditional banks generate revenue from the exact financial products and dependency loops they push you toward. When a bank's financial advisor tells you Bitcoin is too risky, ask yourself one question: does their employer sell Bitcoin? If the answer is no, their risk assessment has a conflict of interest baked right into it. This doesn't mean run out and throw your emergency fund into crypto. That is not what I'm saying. What I'm saying is apply critical thinking to financial advice the same way you'd apply it to a used car salesman trying to upsell you on the extended warranty. Real risk management in 2026 looks like this: diversification across asset classes, a clearly defined position size for high volatility assets like Bitcoin. Most conservative frameworks suggest 1% to 5% of net worth for beginners, and hardware wallet security for any crypto holdings above $500. Never leave significant Bitcoin on an exchange. Not your keys, not your coins. This principle has bankrupted people who ignored it and remains the #1 avoidable crypto loss for beginners. And here's the broader risk management principle that El Salvador actually demonstrated beautifully. Geopolitical and monetary risk is real, and every person sitting in a single currency, single asset saving strategy is carrying more risk than they realize. They just can't see it because it's the risk they were never taught to look for. Section 5. What El Salvador's rise means for your 2026 financial strategy. So let's bring this home, because this isn't just a story about a small Central American country. This is a blueprint, a case study, proof of concept. In 2026, El Salvador's GDP growth rate is outpacing most of its Central American neighbors. Bitcoin tourism has generated hundreds of millions in economic activity around Bitcoin Beach in El Zonte. The country has attracted significant foreign direct investment from technology and fintech sectors specifically because of its progressive monetary policy. Its credit outlook, while still being rebuilt, is showing positive revision signals for the first time in over a decade, according to regional economic reports. A country that was written off, bankrupt, mocked, is now being studied by other nations, including some African and Asian economies, as a model for monetary independence. And the lesson here is personal, deeply personal. How many times have you been written off? How many times has someone, a family member, a boss, a financial system, looked at your situation and said, "That's too risky, stick with what's safe"? El Salvador's entire transformation was built on the foundation of refusing to accept someone else's definition of what's possible for them. The Wise Money 360 principle at the core of this story is simple but brutal in its honesty. The system is not designed to make you wealthy. It is designed to make you functional enough to keep working within it. The moment you understand that, your financial decisions will never look the same again. All right, let's lock in the 3 big takeaways from today before you go. First, a hard asset cap beats unlimited printing every time. Whether it's Bitcoin, real estate, or any scarce commodity, inflation is silently taxing your idle cash. Know your exposure. Second, building financial infrastructure, empowering and uplifting with a steady, reassuring voice. Second, building financial infrastructure beats expense cutting. Stop shrinking your life to save more money. Start building systems that generate money while you sleep. El Salvador proved this at a national scale. Third, the institutions warning you away from alternatives often have a vested interest in keeping you dependent. Apply critical thinking. Always ask, who benefits if I believe this? Inspirational coach, empowering and uplifting with a steady, reassuring voice. Now here's the question I genuinely want to hear your answer to in the comments below. If your country adopted Bitcoin as a reserve asset tomorrow, would you see it as a lifeline or a disaster, and why? Drop it down there. I read every single one. If this video gave you something real, a new perspective, a fact that shocked you, a principle you're going to act on, hit that like button. It genuinely helps this channel reach the people who need this information most. Subscribe and hit the bell. Empowering and uplifting with a steady, reassuring voice. Subscribe and hit the bell so you don't miss what's coming next, because we're going even deeper into the 2026 Bitcoin landscape and what it means for everyday investors who are just getting started. I'm your host at Future Freedom 360. Stay sharp, stay strategic, and I'll see you in the next one. Your future freedom starts right now.